Great. Good afternoon. My name is Chad Gilfillan. Work with the banking group at Red Cloud. Today we have some timely stories. We have a good, strong backdrop of a strong gold price. The Quebec government has now made mining again an essential service, so we can get back to the field and exploring and developing some quality gold projects. And of course, the two companies we have presented today have had some results out and are going to go into more depth about their stories. First, we'll have O3 Mining with Jose Vizquera. O3 was spun out of Osisko Mining, but since then have kind of carved their own path, making two key acquisitions in Quebec and are advancing those. And then following him, we'll have Justin Reed with Troilus Gold, who's got a historic mine, but really breathing some new life in Quebec with now what is an advanced development project. So with that, first, I'll turn it over to Jose. Please keep in mind, we will be taking in questions, and after each presentation, be fielding those questions. So please type your questions in. Jose, with that, over to you.
Well, thank you, Chad, very much for the introduction. I will cover what it's O3, and it's actually great to have here with Justin. It's great to see good professionals around the table. So O3 is really the third iteration of Osisko Mining. Our founder started the Canadian Malartic mine, ended up selling the company for $4.3 billion, made over $3 billion back to investors. In the case of Windfall, I was part of that together with John Brzezinski. We took the project after buying it and consolidating three different companies. We took the company from an $8 million company, as of today, almost $1 billion company. And subsequently to that, during that process, we bought different assets that we were not paying attention. And with those assets that were pretty much orphaned, we decided to maximize value, and we created O3. And now we have a fantastic story that I want to tell you. And you will see why we believe so much in the value of this company. Some cautionary statements. I hope you can read this. And this company is mostly focused in Val-d'Or, although we have one project in Ontario, but we're focused in Val-d'Or. We started with a program of 50,000 meters of drilling. We have already done, as of today, more than 20,000 meters. We have $26.9 million in cash as of December of last year. As of right now, we have in the order of $22 million in the bank. And of course, we had success with Windfall, and we want to replicate the same proprietary methods that we use there to come up with larger, stronger, and more robust resources in the case of our projects at O3, which includes the following ones that I will be covering. With regards to a share price, with the amount of ounces we have right now in books, not that we are in the process of finding them, but we found them, we have the volume of gold right now with us. We have 5.2 million ounces. If we were trading at $40 per ounce, we should be valued at $5.70. So with the run of gold, we expect to see an increase in demand for more exploration stories as we continue to develop this situation. In order to explain where do we are and what do we want to accomplish, we have right now, in terms of development resources, 1.8 million ounces in the case of our Malartic property, which includes a Marban deposit. And we have around 2 million ounces in the case of Garcon in our Golden Bear properties. We also have 1.2 million ounces in Alpha already being discovered, and 200,000 ounces again already discovered in the case of East Cadillac. Again, this makes up 5.2 million ounces. We are covered right now by 4 different analysts, including Red Cloud, and we have an average valuation for the company of around $218 million, while we are trading today at around $65 million. So we have quite a bit of run to do only to catch up to what it is our fundamental value without giving any room for upside. Right now, well, our market cap is $80 million. We have essentially four legs of investors. The first one being Osisko, the second one being management, and myself and our family office, which holds around 6.3%. Chalice Gold, which is a company we bought the Chalice ground in early last year. They have 6.6% of the company, and finally the rest is free float. We're focused, as I mentioned before, in Val-d'Or, but mostly in the Abitibi, in these two very important structures, being the Destor Porcupine structure and the Cadillac Lake break structure. And we control mostly 2/3 of Val-d'Or as of today, and a very important land package in Ontario, and I'll comment on that as well as we progress with the presentation. This is a very important slide because it shows how much property we own in Val-d'Or, in an area where more than 30 million ounces has already been produced, and in an area where there is a lot of infrastructure. You can see by yourself in the map, there is a bunch of mills that are there. Some of them are idle, some of them are owned by major companies. As you can tell, the infrastructure here is extremely important, and it's incredible. No, we have a fantastic opportunity here to deal with this. So as I progress, you will realize what is the premise of what we're aiming to obtain here. And the most important thing that we are trying to do here is to expand the resources. And this is on a basis of pretty much very little risk. So it's low risk and very high reward, in the sense that the projects in Canada in general have became world-class deposits. They were not born as world-class deposits. You can see Red Lake. Red Lake grew up after intensive exploration. You can see what happened with us in the case of Windfall. It was after 1 million meters that extend the resource. You can see what happened with La Ronde number 3, and it has extended up to 3 kilometers. This slide really shows the genesis of Val-d'Or and how much these deposits grows at depth. You have there Sigma-Lamaque, which is only 1 kilometer from where we are. They expanded their resources up to 2 kilometers. And on top of that, there was other discoveries that were made. Reason why El Dorado ended up buying Integra. So you can see why it excites us to have so much good properties around Val-d'Or and areas where we already have a resource, because there is a big chance that we can grow those resources. We have 3 main areas where we focus in our land package: the Malartic property, the Alpha property, and the EC or East Cadillac property. It is absolutely important for us, and it is very important to distinguish the 3 different areas. In the case of Malartic, is an advanced project. In the case of Alpha, not as advanced. In the case of East Cadillac, we're starting to grow the knowledge in the areas. And in the case of Malartic, it is a fantastic property, not only because we are very close from the Canadian Malartic mine. The Canadian Malartic mine is located just 15 kilometers from the Marban deposit. The road takes you up to Marban. Canadian Malartic was a mine that was discovered by our founders, was put in production by our founders. They produced 1 million ounces before they were forced to sell to Agnico and Yamana. And Agnico and Yamana are doing an exceptional job in terms of finding more ore, and they have been finding Odyssey and East Goldie, and they have been really good on expanding their own resources. And of course, these resources keep extending towards Marban, which is really, really good. Now, what we have been doing is mostly working on different alternatives for Marban, Quirens, and Malartic. Internally, we understand that we have a potential of making Marban a standalone project, and we're working towards that. We're right now internally working with different engineer firms to work on a plan for a PEA for Marban, and we'll have news on that regard, hopefully in the next couple of weeks. Marban is also important because in the area of Malartic, which is the name of our property, we have the Camflo mine. The Camflo mine being the first mine that Barrick Gold started. Camflo, Barrick used to be the Barrick Petroleum, which changed to become Barrick Gold by buying the Camflo mine, and the Camflo mine produced 1.6 million ounces of 5.8 grams per ton. So we are in a very productive camp. We are in an area where we hold in our own properties old mines. like the same Marban that produced over 300,000 ounces, like Nolartic that produced almost 200,000 ounces, and in the case of Quirens with 52,000 ounces. We still hold in our properties the old mine Malartic high grade with grades over 22 grams per ton. And this is a very interesting point to make here. These areas have not been well known by being high grade, although if we see the results from Kina on your right hand side, that is a mine where Wesdom has been having extremely good results, and they are in the same break as where we are between the Marbenite and Norbenite. So there is no reason to believe that we're not going to be able to find higher grade than what we have been finding as of right now. But as it is right now, we have 1.8 million ounces of 1.2 grams, which is already 20% more than any other open pit, including Canadian Malartic, in the area of Val-d'Or, and that excites us very much. You will see us doing quite a bit of work in the case of our Malartic property. And stay tuned on that, because this is going to give us a lot of surprise for all of us. In the case of Alpha, of course, we have three main points to be made here. Alpha is a very, very long and large land package. Over 400,000 meters of drilling has been done by previous operators in a very unorganized way, which now we're in the process of organizing everything, and it's a lot of data. We have to work on that, but we're getting there. We have an area that we already identified as a very, very important area called Bulldog and Orenada, and it goes from Epsilon up to Orenada, which means that we have 2 kilometers of strike length that we just need to drill essentially in that same direction, and we have been doing that, and we have been having very good results. On top of that, we have two other points to be made. One, that we have the extension of Triangle in the case of El Dorado towards the border where we are, and it's an area that we are paying attention, and we'll start drilling as soon as the weather allows us. And the second point to be made is in the case of Acasaba, east of Acasaba. If you see that hole in our own land package, you see that hole in there is the hole where we have the Acasaba project, and that is essentially owned by Agnico Eagle. So we have the extension of that property called Acasaba. If you remember, when we launched the takeover bid over Alexandria Minerals, Agnico came on top of us, and they end up offering up to $25 million for this property, and we end up buying the property, and now we are developing it, and I'll show you what we have been able to accomplish, in particular in the area of Orenada and Bulldog. As you see in here, we have an area where there is already a resource, where we have been working by drilling in the area of Bulldog, where you see all these holes in the bottom part where it says Bulldog and Orenada, with very interesting holes like 8.6 meters of 5.3 grams, like 6.6 meters, like 6.9 grams over 13 meters. It is very important to see that Bulldog has extended now to almost 300 meters in strike length and by 500 meters at depth. So now we're starting to build all this reality check, where we have now Marban pointing towards a PEA, Alpha, where we are growing the current resources and making this bigger, where we have Bulldog with results being produced by us, where we understand what we are doing. As we move towards the west, we see more results in the case of our Epsilon project, where we have results like, for example, 6 meters of 9 grams, 5.5 meters of 2.5 grams, 1.5 meters of 13 grams. This area of 4 kilometers in strike length is going to keep producing very, very good results. In the case of East Cadillac, of course, which are the latest results we have shown to the market, it really shows a very big advance from where our predecessors were and where we are today. And we can see in here that we are growing the knowledge in the area. In the case of Simon West, we had results like 1.8 meters of 9 grams, 2 meters of 8.9 grams. This area is starting to grow very nicely. And in the same way, in the case of Nordo West, we see a very interesting advance. Of course, these are good results. And more important, in a new area called North Contact, we are starting to see results in the order of 1.5 meters of 5 grams, 1.3 meters of 8.3 grams, and higher grades, which is really important. So again, as of right now, what do we have? We have a Marban moving towards PEA and looking for the high grade around. We have Alpha, where we are increasing the potential in the current resources, moving to something bigger, with the upside of being close to El Dorado and to Agnico, and where we are going to be working on those areas. And this is our earlier stage exploration, where we are also getting very good results. And this is what it's making the valuation right now of O3. Finally, and not least, we have a very large land package in Ontario, where we have 2 million ounces in the case of Garrison. If we add Garrison, Fengib, and Golden Wave from Moneta, we can see that there is 7 million ounces around the area of Ontario. And this is a phenomenal opportunity here. Kirkland Gold has been very open on saying that they plan to divest their assets in the region, which means all the area in purple. And I mean, this just opens the opportunity either for consolidation or to monetize this asset, which will be great in the case of O3. What we have accomplished so far since February 2019, we have consolidated Val-d'Or in a very extensive way. Once again, we have bought properties with information and resources that our job will be much simpler to expand these resources. And as of right now, by April of 2020, we have more than $22 million in the bank. We have 3 main areas where we are focusing. We have an area like Marban pushing towards PA, Alpha moving into resources, and in the case of East Cadillac, extending these resources. So we have a very clear idea of valuation. We are working right now from home since the declaration of emergency in Quebec. So this has allowed us to continue working on the consolidation of data of all these areas. So we're not losing time, and we're going to be ready to work as soon as the government allows exploration to work. As of yesterday, the government of Quebec allowed mining companies to start operations. So we expect that exploration is being turned on as well in a very short period of time. We hope for that. With that, I'll pass back to Chad, and if you guys have any other questions, of course, I'm happy to keep answering them.
Yeah, the first question I had, Jose, was a continuation of your last statement, highlighting that it's uncertain when exploration will be back. I'll change the question a little bit because you kind of addressed it already. But I mean, how is your team positioned to get back in the field? I know you're well funded. When it is time to go, how quickly can you remobilize?
Oh, we can move very fast, very, very fast. Again, our priority right now is to work towards PEA in the case of Marban. So we're more focused into that because we believe that we need to start putting real numbers into O3, and this is a way to make it very clear that we not only have ounces, but we have profitable ounces, and that is a very, very important point that we need to pass to market.
So when you reinitiate kind of field program and you're a month in, how do you see how many rigs are going and kind of
we had 5 drills drilling before we had to stop, or we were forced to stop. When we restart, probably we'll do it with 1 drill or 2.
Okay, that's great. And I had one other question. You have a tremendous amount of exposure to the extension of the Cadillac Break, but there's been very little exploration east Val-d'Or. Can you kind of explain why that is and why you kind of have an opportunity there?
Yes, of course. In the area of the east area of Val-d'Or, there has been, it's an area which is, first of all, a little bit more swampy or mushy, if you want to call it. Prospectors arrived there, but there was no continuation of work. most of the work was done on the western side of Val-d'Or, if we want to call that center part where Dorado is located. And it's mostly because there was more outcrops and more work was done in there. If we compare the 400,000 meters of drilling that has been done on the eastern side of Val-d'Or compared to the western side, I think I would be short if I say it's 1/10. So there is no reason to believe that the eastern side is not as productive as the western side, at least not without drilling.
Okay. And one other question. If you had to take on a project by project basis, a participant is asking, how would you roughly split down the exploration budget on a project by project basis?
Well, we mentioned that during the presentation. We have 10,000 meters in the case of Malartic. We'll do 25 meters in the case of East Cadillac. In the case of Alpha, and 15,000 meters in the case of East Cadillac. And that makes our 50,000 meter program. We did not expect the results that we were getting in Marban with regards to our internal numbers towards PEA. We might be relocating some more meters into the Malartic land package, which is it has been demonstrated as through these last couple of months of work that we have a quite big potential there.
Great, Jose. Thank you very much. Great overview. With that, in the interest of time, we're going to push over to Justin Reed with Troilus Gold.
Thank you so much.
Hi there. Can you hear me okay?
Yep.
Good afternoon, everybody. Thanks to Red Cloud for hosting this. And it's also a pleasure to present with my friend and colleague, Jose. Not only am I a shareholder of O3, but O3 is a shareholder of Troilus, and we've had a great relationship with them. I'm pleased to present Troilus Gold to you this afternoon. The title, "A New Life for the former Troilus Gold Mine," I think is well deserved. Standard cautionary statements, and we'll move through. What was Troilus? Troilus was discovered in 86 and 87, put into production in 1996, and during a 14-year period, it produced 2 million ounces of gold and 70,000 tons of copper for Inmet. Inmet was taken over by First Quantum, predominantly for its global base metal assets, and predominantly Cobre Panama. And Troilus was nearing the end of its mine life, and very limited capital had been invested into the mine over its life. As such, they just shut it down. At that time, Canadian gold was not in favor. Investors were focusing on Malartic, on Detour, and other advancing assets, and Troilus was kind of forgotten about. We had 2 million ounces at 1.6 grams underground, analogous to an Agnico Goldex. Raised $25 million and took a good look at the exploration potential of the property. Jump forward to today. In just 24 months, we've drilled almost 80,000 meters. We've taken the resource from 2 million ounces underground to 6.4 million ounces, where the majority of those ounces are open pit, within a permitted mining lease and having over $400 million in infrastructure that I'll walk you through. There's a picture of the mine. Majority of the production came from Z87, which is about 350 meters deep, and the J4 pit, which had about 120 meters depth. We have 88 million shares out. We have $50 million in the bank, having just completed a financing in February. We're well covered by the street, including Red Cloud, and right now we're about a $72 million market cap. We're well positioned for the impact of COVID, though things look like they're opening up, as Jose mentioned. We have yet to see real guidance on the exploration side, and we're positioned well as we move forward. We're engaged with our shareholders and our stakeholders. Our site is on care and maintenance, but well maintained. Our staff is all working remotely. But luckily, with the financing complete and with 6,000 meters of drilling completed in January and February, we are really well positioned to continue driving our project forward, to delight the market volatility, and we're prepared to get right back to work the moment that we can. We are 80% institutionally held. Insiders and management, including myself and our senior management team, own 10% of the company. We bought every share in the market, and we participate on all of our deals. We're extremely proud of our Quebec ownership, predominantly the case, FTQ, Sidex, the James Bay Investment Board. Chibougamau Drillers are great shareholders for us too, and the rest are global funds. So we're well supported by the institutional world. We're about 10% held by retail, and that's growing. So we're in a low-risk jurisdiction. I'm not going to spend any time on why Quebec's great. We know the deposit is growing. In just 24 months, we've added 4.5 million ounces of economic ounces. All the major infrastructure, with the exception of a mill, is in place. That's going to have an impact, a positive impact on the valuation and the return to our shareholders. We are adding ounces as we drill. We are adding ounces faster than we can imagine. We have a team in place to deliver this project to our shareholders, and our stakeholders have been there to support us the whole way. Where we're located, we all know the Abitibi. We're located in the Fred Evans Greenstone Belt, about 250 kilometers north of the Abitibi. The main difference between the Abitibi and the Fred Evans Belt: same rocks, we're slightly higher metamorphic grade, same age. Fact is, we're buried under 8 to 10 meters of till where the Abitibi is exposed. So the lack of production and the lack of mines in the Fred Evans Belt has really been a function of exploration. For every 5,000 meters drilled in the Abitibi, there's probably been one in the Fred Belt. So certainly now we're a major focus of provincial and national exploration, and the majority of majors are exploring around us. Accessibility is great. Come to Chibougamau. We are an hour-and-a-half drive on a road on Rue Nord, and then in off of the old Hull Road, which is production ready to site. Chibougamau is a town of over 3,500 people and has everything that we need and supports many major mining operations. Our property, we have 16,000 hectares. Originally, we started with just the J zone and Z87 and the ground to the southwest on a mining lease. We acquired the rest of the property through consolidation last year, which included a deal with Jose, which helped us consolidate some of the key ground to the northeast. We have over 20 kilometers of unexplored trend to the north, and we're excited to get there very shortly. A major point of differentiation for us before I get into the deposit is our infrastructure. We have 40 kilometers of production-ready road into site. That costs $1.5 million a kilometer to build. That's our market cap. Everything else I'll talk about is free. Hydro-Quebec has just upgraded our entire sole-use power line to site. That's about $750,000 a kilometer to build. We have a 50-megawatt substation in place capable of running up to a 30,000-ton-a-day mill and a 700-man camp, and construction camp all included. We have a 60-man camp in place. We have sewer, septic, water for not only that camp, but ultimately an operational camp. We have offices, core storage. Underneath those pictures is 6.5 square kilometers of permitted tailings. If you assume 20,000 ton a day operation and conventional tails, we have about 6 years of capacity without having to do a lift. And then you can see the pits in the distance. The earthworks are completed. We're now getting to the point where we'll be permitted to dewater, hopefully this spring. All of that on this slide depending on where you want to throw your dart, is probably worth between $300 and $350 million. When assuming a capex to build a new mine from scratch, that's going to have a material impact on the economics going forward. Here's our growth: 80,000 meters of drilling, 6.4 million ounces. This is a lower grade bulk tonnage deposit, typically mined at around a gram historically, and I think we'll show you that the similar persists. However, we are finding significant higher grades, which are going to add to the economics going forward. That's what we inherited, and that's where we are now in our 2 years of work. The J5 pit in 2016 had about 200,000 ounces underneath, and the J4 underneath the old pit. And there was about 2 million ounces underneath the Z87 deposit. The underground is important. It's 50 meters wide. It's 1.2 kilometer strike length. It's a very homogeneous deposit, quite analogous to Goldex. And then in 2019, that's 6.4 million ounces. We've extended the mineralization Z87 down to 800 meters. We've stopped drilling. As Jose mentioned, these deposits tend to increase in size as you go in depth. We're seeing the same. We've extended Z87 south off of the pit at surface 600 meters, and J4 has a whittle shell that's pushing down to 500 meters right now. What that gives us is a very significant open pit scenario from multiple production sources and an underground capable of adding grade as we move to production. That's the distribution of our drilling. You can see the majority has been focused on the active mining lease. Take a look to the right side of the page. That's 3.5 kilometers away. That's the southwest zone. That's a discovery we announced in January and put out some results yesterday as well. And that is absolutely turning into something special. That could be another production source for us as we continue our work. This is a 0.3 cutoff. This is a cross section of our resource and whittle shells at a 0.3 cutoff for gold for the open pit and 0.9 for the underground. That's 6.4 million ounces. The ore body is incredibly consistent. The strip is very low. I'll just really focus on the Z87 south area as you push off the southwest off of the main pit. The white you see on that cross section is not a function of no ore, no mineralization. It's a function that we haven't drilled there yet. We've only been a company for 2 years and we're just getting to it. This is a 1 gram ore body and a 1.8 gram ore body in the underground that we're showing you. If we were to change the cutoff to 0.9, you would still see 2 million ounces in the open pit at 1.5 grams. And if you went to a 1.2 gram cutoff on the underground, you'd have a 2 gram ore body. So we have a lot of flexibility with the grade depending on the gold environment. But certainly in a $1,700 gold environment, you're taking everything. Geological map, the majority of the mineralization is hosted or proximal to the brecciated zones within the Troilus diorite. What we found is that the mineralization is not stratigraphically or lithologically constrained; it's structurally constrained and in place. And as such, we've put a new model on the deposit, and this model has resulted in 4.5 million ounces of discovery in 2 years. The southwest zone is our first application of these new models away from the main mine, and we'll talk about the significance of those shortly. I throw this up just to show you that it's not that Inmet did poor work. The fact is Inmet didn't do any work. It wasn't a corporate directive for them. They were not focused on expanding Troilus. Their corporate objectives were elsewhere. We were told there was nothing under the J4 pit, and you can see the V on the left-hand side is the old J4 pit. We're told there's nothing underneath. Well, immediately below the pit, we hit 1.3 grams over 64 meters, and the ore body continues at depth. It's a very robust system, and as we drill, we add more. And the underground, like I said, we have 2 million ounces at 1.8 grams. at a 0.9 cutoff. This is significant. The ore body is wide, is consistent, is homogeneous. At the end of the mine life, the superintendent put in a $7 million, 450 meter ramp into that ore body. So a lot of investors don't like low-grade bulk tonnage underground deposits. Goldex is an incredibly profitable mine. What I would say to that is 350 meters of pre-strip is done, and the ramp's in. So in any production scenario, we can bring 2 gram plus material out, blend it with lower grade 1 gram-ish ore, and supplement production. We with 6.5 million ounces, we have a very long life ahead of us. Let's go down the southwest. We drilled it in December the first time at our discovery hole. In hole 177, we intersected 2.87 grams over 17 meters, including 2.26 over 24. That immediately focused. Those intersections were all less than 150 meters depth from surface. We went in, we've just completed 6,000 meters. We put our first batch of results to the market yesterday, and we announced 1.6 grams over 33 meters, including 2.3 over 8 and 3.8 over 7. And there's a 7 gram over a meter in there, all less than 75 meters from surface. What originally we considered to be a 500 meter strike length, the drilling that we've completed has now stretched this zone out over 1 kilometer. And to put that in perspective, the strike length of the southwest zone and the mineralization we've identified is the same strike length as Z87 to the northeast. Very shallow, higher grade, looks a lot like Z87 to us. And just to follow up on that, the southwest zone, we've really broken up into 2 zones, the west zone and the main zone, you can see on the left. And our geological model has really shown that the J zone and Z87 are 2 opposite sides of a syncline, a deformed syncline, and that the limbs of these folds extend all the way to the south. So 3.5 kilometers away, the southwest zone, which we're hitting now, looks a lot like Z87. The tenure of mineralization appears to look similar as we come off the edge of the pit, and it's wide open. The 3.5 kilometers provides a lot of exploration opportunity as we move forward, all within the infrastructure of the mine, all within the ability to use a centralized processing facility. It's on this ore body, and this discovery is on the road. Here's a picture, a cross section of what it looks like, a section. Very homogeneous. The hole 184 that we released yesterday. Again, notice the 100 meter depth level. That is a great ore body or a great intersection with quite high grades, very shallow. And we see it to be very homogeneous. We expect more to continue. There is a high-grade trend at Troilus that was never really realized. Our drilling over the last 2 years has had some huge success. In the J zone, we've drilled over 4 grams over 20 meters, 6 meters of 11 grams. We had 42 grams over 2 meters, 7 meters of 20. I won't read all the numbers, but the significance here is that this is not a stratigraphically controlled deposit, it's a structurally controlled deposit. There is a broad-based, low-grade gold halo that's running around 1 gram. There is a secondary, remobilized, higher-grade gold system associated with perpendicular fluid flow to the main trend. And the most important thing to us is that it's identifiable, it's predictable now, and we can replicate it section after section. So when you move into a production scenario and we start building a mine plan around these pits, we're going to be able to maximize it. I don't usually put in valuation slides with competitors, but our work today showed that Jose and I are both exactly equally valued. on an EV to gold equivalent and on a price to NAV based on consensus. So this isn't just for Troilus, this is for O3 too. I think both presentations hopefully have shown that of all the exploration companies in Quebec, Troilus and O3 probably have the most upside on different sides of the province to upside through the drill bit, and we're probably the two best capitalized companies as well. What you're going to see from us, we've completed our EIA. Small EIA on dewatering. We've done all the sampling. We've submitted our permit. We've had our first questions back, and we've sent those answers in. We've bought a water treatment plant from Eleanor. We've installed it. We've ran 2 kilometers of power to the site. We expect to be dewatering those pits starting in the spring. We are working towards a PEA, which we hope to have out this summer. It's going to incorporate a production scenario from Z87 and J4, and we'll certainly see what the Southwest brings in. We have another 12 to 13 holes from the Southwest to come out over the next few months or a few weeks, and that will culminate in a new resource as well, and I think you're going to see continued growth. The team is in place to do it. I'm certainly going to highlight our Senior VP Exploration, Blake Highlands, and his technical team who've added the 4.5 million ounces. Ian Pritchard is leading our engineering charge, and Jacqueline LaRue is making sure that all of our permitting is well underway. We have a great team who works really well together, and it's a pleasure to work with them. And just the board, then I'll wrap it up. We have a great team. Andrew Cheadle was the GM at Musselwhite for 10 years. Dr. John Hedegario is the chair of Lassonde School of Mines. His consultancy is also the head of the External Technical Review Committee for Malartic and for LaRonde. Eric Lamontagne engineered and constructed Melody and Meadowbank for Agnico. He's running the Greenstone JV right now for Centerra and Premier. And more importantly, he was the last superintendent at Troilus and brings that historic knowledge to us and has been a huge help to us. So we have a really experienced board going forward. And that's it. Thanks very much.
Great. Thanks, Justin. A few questions. There is a common thread in the questioning related to timing to high level to what you think production, given the sunk infrastructure there, what could be feasible, as well as kind of scopes of capital. Again, the fact that you have so much in place infrastructure, where maybe those capital items are dominated.
Yeah, I mean, as far as timing, in Quebec, you have to be careful. It's all about managing expectations. Permitting is not an issue, especially with a brownfield site. But we have to know what we're building. You know, we know that we have a long-lived 200,000 ounce plus producer a year at J4 and Z87 together. The Southwest Zone has put a positive wrinkle into what we're doing. And what was going to be a pre-feasibility at the end of this year is now going to be a PEA this summer. And that's simply because we now have another very shallow, higher grade potential production source with drilling that we're putting a resource around now. And we'd like to incorporate that into a mine plan. But a lot of the engineering we've completed already, which we haven't put out, is at the feasibility level. And that will all culminate into a pre-feasibility, again, early next year. We'll be able to put a feasibility out quite rapidly after that. So we really look at this as an end of 22, beginning of 23 build. Capital items, we need a mill, and we need a fleet, and we need a camp. And so what would probably be a $700 to $800 million capex for something like this will be circa $300 million or less. Yeah,
wow, great. You know, feeding into that, obviously there's still some exploration upside. So putting a pin in a PA is a difficult decision. but especially interested in the between 87 and the southwest. Given you think those are kind of fold limbs, how do you see the potential there? Is it potential for a continuous on the stratigraphy? You mentioned it's more structurally controlled. So, I mean, what are kind of some of the theories of what might be in between those two areas?
Yeah, I mean, they are. This is structurally controlled, but these synclinal limbs are structurally based.
Mm-hmm.
If you come off of Z87, the Z87 South Zone, the main pit, we see the stratigraphy get slightly more felsic. We see a higher degree of alteration, and we start to see a higher degree of base metals, copper, a little bit of zinc coming in. You look at the main zone down at the southwest, 3.5 kilometers away, higher alteration. In fact, in a lot of places, the fabrics are destroyed. Replacement with magnetite, emplacement of base metals as well. And it looks a lot like coming off of Z87 South. So that whole 3.5 kilometers on that limb is open. It's not all going to be mineralized, but we're seeing a lot of smoke along both sides of those limbs, the J4 equivalent limb and the Z87 South limb. So that's one target for us. Then to the north, north of J4 through Alonge and then the other 20 kilometers, we were on the ground last summer for the first time. We found over 100 mineralized outcrops ranging up to 100 grams. The ground that we purchased from Jose are 3 incredibly important claims right in the middle of our property that had some mineralized boulder trains, and we've completed geochemistry over top of those. We think that's going to be a great target for us as well. And so we just have to get out and drill. What we do know is we have a place to start. We have 6.4 million ounces right now. That's going to grow. And how many ounces are on that property? I mean, it's speculation, but this is a camp. This isn't a deposit. And we've just got there. So that's the fun part.
Yeah, excellent. Along that vein, another question is how does the Southwest actually fit into the PEA, and how do you balance between high grade and also cutoffs and kind of the existing pits, and how do you think this kind of big picture takes shape?
I mean, that's a good question. How does the Southwest plan? Don't know. I mean, I'm going to be perfectly honest. We've completed 8,500 meters of drilling there. I'm confident we're going to get a great inferred resource there, and we haven't seen it yet. We're getting close. I see it as a production center, and when it comes into the sequencing remains to be seen. However, all the mineralization we're showing is shallower than 200 meters, and in many cases, a lot shallower than that. We're seeing a grade that is 20 to 30% higher than J4 in places, and reminiscent of what Z87 originally was. So I think we have to, even if it takes a few extra months, we have to spend the time on the Southwest Zone, because from a production staging standpoint, shallower and higher grade means that you're returning your capital to your shareholders sooner. And so I would say if it turns out like it looks like it is, it'll probably be earlier in the mine life than later. Okay.
Are there any NSR royalties on the property? Someone is asking.
We have 1.5 to 2.5 to First Quantum. That's on the main mining lease. And then to the northeast, we have a 2% royalty to Jose on the 3 claims that we've bought from him, and we have a 50% buyback on that. Plus, we have a 1% to M Gold, who we bought the properties from.
All right, and I'll put you on the spot for the last one of the day. Obviously, a sizable gold deposit in a good jurisdiction. Who are your natural buyers is the question.
Not for sale.
There's still room to grow.
Still room to grow. I mean, it's more of a holistic comment when you look at Quebec, and Jose will tell you the exact same thing. Reserves are being depleted and not replaced. The companies that are adding gold to the balance sheet, Jose, Troilus, and a few other great companies. And there's a lot of infrastructure and a lot of mills that need to be fed. There's a lot of valuations that need to be backstopped. I think that it's going to be a buyer's market out there in the sense that they have to, right? We keep our head down. We're really well held. Our management team has a lot of stock. We have great stakeholders. And at the end of the day, if we are moving forward to build this mine, we have the team to build this mine. We want to build this mine. Our shareholders will tell us what to do.
Great. Thank you, Justin. Thank you, Jose, for your time. Two great stories, and we'll keep watching. I will close quickly. We do have a webinar tomorrow for Dore Copper. For those of you that can join, we also continue with our uranium themes with 2 webinars next week. Watch for those, as well as a webinar with SolGold. With that, thank you everyone for your time, and watch for the replay as well. Thanks.
Thanks, Chad.